Thanks for sharing. That document is a preliminary registration prospectus for Blue Owl Alternative Credit Fund, the Fund Ent, filed with the SEC on August 7, 2025. It describes a registered, non-diversified, closed-end interval fund offering multiple share classes, Class S, Class U, Class I, with a focus on alternative credit assets and a built-in liquidity via quarterly repurchase offers. If you'd like, I can tailor this into a quick summary, a section-by-section digest, or pull out specific details, fees, investment objective, risk factors, portfolio snapshot, etc. Below is a concise high-level overview to help you get oriented and can key points at a glance. What the fund is, Accession, a Delaware statutory trust registered under the Investment Company Act of 1940 DA, operates as an interval fund, quarterly repurchase offers, NFTA-based pricing, illiquidity in between offers, Act 2 not listed on an exchange. Liquidity is provided by quarterly repurchase offers, 5% to 25% of outstanding shares, MA-based. Share classes and fees catcher numbers. Upfront sales load. None for Class S and Class U. Class I also has no upfront load, .U12B, 1 distribution servicing fees. Class I also has no upfront load, free 1D distribution plan. Class S and Class U have ongoing distribution servicing fees. Class I has no distribution fees, servicing fees. Class I has no distribution fees, serve its 0.5% of average daily managed assets. Any waiver shown in the prospectus ranges by class, roughly in the mid 3% to anything after the hurdle distribution fee. Servicing fees, Class SF to average daily managed asset inclusive subject to an 805 Metz income returns, subject to our incentive assets daily managed assets, hence the servicing fee. Class I as Class U 0.75% of average daily managed assets inclusive of borrowings for investment purposes. Of average daily managed assets inclusive of borrowings for investment purposes of ABFRANI 5 and arrears, and incentive fee 175% of average daily managed assets. Investment objective and strategy COW-EB objective generate current income and to a lesser extent long-term capital appreciation. The policy invest primarily in alternative credit assets and strategies may form joint ventures and SPVs to pursue investments. TAV use of leverage permitted with asset coverage requirements, e.g. 300% asset coverage for senior indebtedness and 200% for preferred stock where applicable. Leverage aims to enhance returns but adds risk from leverage permitted with asset coverage requirements, e.g. 300% asset coverage for senior indebtedness and 20 creditors. This includes asset-based finance, private credit, securitized products and related credit strategies at sea. Approach dynamic flexible mandate across a wide spectrum of credit assets and strategies may form joint ventures and SPVs to pursue investments. Other creates dynamic flexible mandate across a wide spectrum of credit assets and strategies may form joint ventures and SPVs to pursue investments. Tabbed user may form joint ventures and SPVs. Liquidity and structure Charlie interval fund with quarterly repurchases to provide liquidity 5% to 25% to 25% of outstanding shares. Actual repurchases may be the minimum 5% if conditions require. I call X of true share is expected to develop. Our initial operations began in March 2025. NEVI is calculated daily for each share class with a valuation process that may involve independent pricing services for non-quoted assets. Portfolio snapshot as described in the prospectus take yay. The unaudited portfolio schedule references investments across our asset-based finance, e.g. equipment, aircraft leasing, consumer and small business receivables, corporate lending, securitization vehicles with a substantial portion of assets in private alternative credit assets, and equity interests in various portfolio companies and securitized assets and equity interests in other private credit-oriented holdings, of securitization vehicles with a substantial portion of assets in private alternative credit assets and equity interests in various portfolio companies and securitization vehicles with a substantial portion of assets in private alternative credit assets, and equity interests in various portfolio companies and securitization vehicles with a substantial portion of assets in private alternative credit structures and equity interests in various portfolio companies and securitization vehicles with a substantial portion of assets in private alternative credits or sensors. Risks and disclosures. Actuaris. Your document contains extensive risk disclosures typical of a specialized leverage-enabled illiquid credit fund, including XEO, market and strategy risk, credit risks, liquidity risk, valuation risk, leverage risk Archrexis, regulation finance, marketplace lending, real assets, and mortgage salvations tax structure AFE, and the potential impact of new laws, adulations on servicing MSRs and consumer lending Tafretiv Asakales, performance comparisons reference a compost of interest and co-investment relationships, extra IS and disrelation risk, leverage risk is a stuck, litigation finance, marketplace lending, real assets, and mortgages REIT exposure, regulatory and legal risk including 5, performance history is not yet established, performance comparisons reference a composite that is not the fund itself, bond, governance and service providers, Quadrat Blue Advisor, Blue Owl Alternative Credit Advisors 2 LLC, an affiliate of Blue Owl T Administrator. Advisor serves in multiple capacities. Diverse governance and service providers, custodian, transfer agent, independent accountants, legal counsel are identified in the prospectus. Portfolio transparency cut as an unaudited list of portfolio investments is included, with disclosures about fair value measurements, level 3 inputs where applicable, and details on various asset types and categorization. What you might want to do next. If you'd like a deeper dive, I can extract and present XC, defray by class, class S, class U, class I, and compare the economics across classes DNS, the precise 80% definition and the subcategories of alternative credit assets as described, Afterduve credit assets as described, Afterduve credit assets as described, objective and strategy, this fund, pros, cons, liquidity profile, leverage implications, and key risk factors when a Quine sec sheet for an investor considering this fund, pros, cons, liquidity profile, leverage implications, and key risk factors. If you're evaluating an investment, I can help generate a quick checklist of due diligence questions, e.g. CRIV. How does the fund plan to use leverage and what are the asset coverage tests today? XFE, what is the expected range of annualized fees after waivers in the first 1 to 3 years? Accepted range of annualized fees after waivers in the first 1 to 3 years. Closed it. How liquid is the portfolio on a quarterly basis and how are repurchase offers structured and priced ACSEV? What is the actual portfolio exposure to high risk asset classes, e.g. private credit, distressed debt, ABSXLOs, and what are the corresponding risk metrics? Would you like me to produce a plain English summary by section, or I could pull out a specific part, e.g. fees and expenses, or investment objective and strategies, and expenses, or investment objective and strategies into a short read, or easy build a quick Q&A with common investor questions about interval funds like this word sell me. Which format you prefer and any specifics you want highlighted.